2020 has turned out to be quite the year. We've got a pandemic, we've got wildfires, we've got hurricanes, and now we get to end the year with a presidential election that will probably be one for the books. So with that on the horizon, we thought it would be a great time to share the evidence and the history of how markets have performed in previous elections, and whether or not you should be doing something with your portfolio so that you can prepare for this one. First, let's take a look at a chart that'll show you the return of the S&P 500 in each presidential election year dating back to 1928. What you can see here is the average return of the subsequent year to the election in green, and average return during the election in gray. Now the long-term average of the S&P 500 is right around 10% during this period. So the interesting thing here is that both the election year at 11.3% and subsequent year of 9.9% all fall really close to the long-term average of what the markets provide over the long term. So what this information is showing us is that the election years fall right in line with typical market performance. Now you obviously have some big ones like 2008 with Obama versus McCain, Bush versus Gore, Nixon versus McGovern, and Roosevelt versus Landon. But I will ask you, do you think that it was the president or the party in power that single-handedly caused the stock market performance numbers that you see on the screen, both in the bad years and the good? So as you ponder that question that I just posed to you, let's continue down this rabbit hole of the presidential elections in the markets and look at it through a little bit of a different lens, which is the actual term of the president themselves. And we'll look at the history of the term of the president and who was in power during that time. As mentioned, this is showing you the return during each of these presidents' terms, with the red being a Republican and the blue being a Democrat. Probably didn't need to clarify the colors, but just in case. Two things on this graph. One, I would be hard-pressed to discover any type of pattern or correlation between candidate or party and the market return, other than the fact that for the most part, markets delivered positive returns during both blue and red. The second thing is that I want you to notice is that the average of the presidential terms, which is 10.3%, is right in line with the standard market performance over those time periods. So again, nothing promotes a big outlier for one party or another. Now the last graph that we want to share with you is a pretty neat one. It's going to show you the growth of a dollar from 1926 to current, and it's got a neat overlay that's just going to show you the president in power during that time and the party as well. Now I don't know about you, but I like the long-term trend of this graph, regardless of blue, red, or the president associated with that period. Now we can come back to the idea of, should you be making any kind of substantive change to your investment strategy or allocation for this election? And while we most likely will see some volatility in the short term with the uncertainty and the pandemic, there's just too many factors that affect the daily prices of stocks. So here's an example. Let's say on election day, the candidate that you are the least enchanted with, let's say, ends up winning in November. And so most likely you're going to be a little bit more pessimistic about the future of the country, the economy, and maybe your portfolio. So you might have some tendencies to want to pull back on how aggressive you are, or just the equity allocation of your portfolio. And now just for example, let's say a week after that, a vaccine comes out and it just completely wipes out the negative effects of COVID-19. Now it's gone through all the trial phases, so it's good. This is an example, of course. And people just start going back to work. They start traveling again. They get back in the office. Restaurants are packed again. Or that doesn't even happen. Let's just say we get some surprising good economic data. Where do you think the market will be, regardless of the person in the White House, whether that's Trump or Biden? And that's most likely up. And that's the beauty of investing in the capital markets. You're investing in companies that are creating goods, services, continually innovating, and will adjust to any environment, whether it's policy changes, tax code changes, or whoever's in the White House. So hopefully you can take some solace in that. So to summarize, there is just no clear evidence to say that if one party wins or if one president wins, that is going to sway the market one way or another. There's just simply too many outside factors influencing the stock prices on a daily basis to make the president or the party in power the deciding factor. So again, the takeaway from this is just to stick with your investment plan, ride this thing out, don't be swayed one way or another in this particular election cycle. And hopefully we can look forward to a very uneventful 2021 as we get through this pandemic on the other end of it. So thanks for watching this video. Stay safe out there, stay healthy, and we'll see you next time. Take care.